Assalamualaikum and salam sejahtera. Welcome to the last topic for ACC 106, which is bank reconciliation statement. Right, so there are three subtopics here. The first one is the use of banking facilities for safekeeping of cash to update cash book, and the last one, reconciling the bank account with the bank statement. All right. Okay, so at the end of this topic, you should be able to prepare the adjusted cash book and also bank reconciliation statement. All right, so let's look at the first subtopic, which is use of banking facilities for safekeeping of cash. All right, so it is a common practice in the business world, to use banking facility, all right, to keep the money, all right, for safety and security reason, compared to if you keep the money or cash at the business premises, there is a possibility for robbery or theft, right? And then because of that, because we are keeping our money at this entity, which is the bank, so the bank will keep track all transactions, made by the business using the cash in the bank account at the bank. And at the end of the month, the business will receive a copy of the bank statement from the bank, and even though we keep the money at the bank, all right, and then the bank keep track of all the cash transaction that happen in the bank account, but at the same time we do keep a record of our own, either we use a cash book or cash receipt or cash payment journals, and then at the end of the day we transfer to the bank account, to calculate the balance of the account, all right, to calculate the closing balance at the end of the day. All right, so what happened is at the end of the month, when you calculate the closing balance and then when you compare with the bank statement that you receive from the bank, there is not it is not unusual, to have a different amount in the closing balance of your bank account and also in the closing balance of the bank statements. There are reasons, for the difference. All right. Next. And there is also a difference between the way bank prepare their bank statement and the way the business record the cash transaction, using check. All right, so for bank statement, there are two columns, there are three columns basically: debit, credit, balance. Debit, credit, balance. So debit represent payments or charges, credit records receipts, and then we have a balance column. All right, for cash book, as what you have learned before, for cash book or bank account, debit is to record any receipt, to record any receipt, and credit is for any payment of cash, and our focus here is for payment of cash using check. All right, next. All right, so this is the next subtopic, which is update cash book. All right, so upon receiving a bank statement from the bank, the business will check the bank statement against cash book. It is not uncommon to have different amounts of closing balance of cash at bank between bank statement and cash book. So this is like what I said just now. It is not uncommon, it is not unusual, to have a different closing balances, all right, of cash at the bank, by referring to the bank statement, and also the bank account or cash book, that is written in the business, that is written by the business. All right, so what are the reasons for the differences between bank statement and the cash book? One of the reason is the transaction recorded in cash book. When you withdraw check, for example, so you record the transaction. You make a payment to account payable using check, so you record the transaction. But the check, is not yet recorded by the bank. It's not yet recorded by the bank. Let's say, for example, today you write your check, and then you issue to your account payable for the payment, of your credit purchase. All right, but there is a possibility that your account payable, will take maybe 1 or 2 days after that, okay, to bring the check to the bank, okay, for check clearance. Okay, so there is a delay, and maybe that delay, okay, involve 2 different months. Okay, you issue check at the end of the month, and then they only bring the check to the bank at the beginning of the following month. So when you receive the bank statement for the current month, okay, the transaction will not appear in the bank statement but in the following month bank statement, right? Okay, so that is one of the difference. Okay, the second difference here is the transaction recorded at bank, okay, but not yet recorded in cash book. Okay, because nowadays most of the transactions are made online. All right, so there are certain transactions that we might not aware of, okay, when the transaction happened at the bank. Okay, so we may not have the evidence, okay, to record in the cash book, maybe the source document. Okay, we don't have the source document, so we did not record in the cash book, but we only know about that, okay, after we receive the bank statement. All right, so that's why we need a reconciliation. Okay, so that's why we need a reconciliation between bank statement and cash book. So we prepare bank reconciliation statement, okay, because we need to know what are the causes of the difference. Okay, all right, and then there also are the possible reason, okay, that cause the difference between the closing balances, okay, which is the error. And this error could be made by the bank, could be made by the business. Okay, so bank also may make the error. Okay, but and the business also may make the error. Maybe, for example, the clerk wrongly recorded the amount of check issued to the supplier, okay, or wrongly recorded the receipts from the customer, from your credit customer, or from your customer for any cash sales, right? Or maybe also the clerk, okay, wrongly recorded the payment in the credit side of your bank account. So when you balance off the account, you have you will have a lower balances. Okay, so it should be a receipt, okay, but then you record as a payment. All right, or a payment you record as a receipt. Okay, all right, so there is a possibility, okay, of that error to be made. Okay, all right, so next. So I think the next one explain further about the transactions. Okay, about the transaction recorded in cash book but not yet recorded by bank, and transaction recorded at bank but not yet recorded in the cash book. Okay, transaction recorded in cash book. Okay, for example, you receive check from your customer, or you issue check to your supplier for the payment or any payment. All right. Okay. So what happened is, okay, let's say for example the first, all right, so the first difference is, okay, so this one, okay, uncredited launchment or uncredited check. Okay, so the first reason, the first example, okay, for transaction recorded in cash book but not yet recorded by bank. So the first one is uncredited check. Okay, what does it mean by that? Okay, the business received check. Okay, the business received check maybe from the customer. It could be from other entity as well. Okay, so let's say the business received check from the customer for the payment. Okay, so the business recorded the transaction in cash book. So the business received the check, record the check number, record the check amount, okay, and record the transaction. Okay, record the nature of the transaction. All right. But this transaction, okay, is not yet recorded in the bank statement. Okay, why? Possibly due to processing time at the bank. Okay, let's say for example you receive check, but okay, only at the end of the day you will go to the check deposit machine, okay, to deposit your check. All right, and then it takes up 2-3 days, 3 working days, okay, for the bank to process the check. Okay, maybe you deposit the check at the end of the month. So when it takes 3 days to process, so the check will be processed in the following month. Okay, so when you receive the bank statement for the current month, okay, in the bank statement, this transaction will not appear. Okay, all right. And next is unpresented check. Okay, so the next one is unpresented check. So this is where the business issued check for any payment. Let's say, for example, business issued check for payment to supplier. Okay, so what happened? When you issue check, you record that item in the cash book. Okay, but okay, when you receive the bank statement, it is not yet recorded in the bank statement. Okay, possibly because the recipient of the check has not yet brought the check for payment or clearance at the bank. Okay, or maybe because of the delay in the processing time. Okay, all right. What about the transactions recorded at bank but not yet recorded in the cash book? Okay, so we have few examples here. Okay. All right. So we have more. Okay. So transaction recorded at bank but not yet recorded in cash book. So number one is direct debit. Okay. So this is the deductions or the additions of money. Okay. That were made online. Okay. From bank to another bank. Okay. So number one is direct debit. Okay, arrangement made by the account payable for direct payment deduction through business bank accounts with the permission from the business. Okay, so this is an arrangement made by the account payable. Let's say, for example, insurance. Okay, let's say, for example, for the insurance payment, so the insurance company will make arrangement with the bank, okay, for automatic deduction. Okay, for the payment of the insurance premium. Okay, however, okay, these deductions, okay, are made with the permissions from the business. Okay, so business aware that they have granted the permission for the account payable to make a direct or automatic deduction from their bank account. It's just that at the business premise, okay, maybe the clerk, okay, did not aware when this transaction will happen at the bank. Okay, so usually we'll wait until end of the month until we receive the bank statement, okay, to see for any of these transaction. Okay, all right. And the next one is standing instruction. Okay, so we have done with this one. Standing instruction or standing order. Okay, so this is similar to direct payment deduction, except that this arrangement made by the business itself, okay, made by the business to the account payable, okay, meaning that the business made the arrangement, okay, to allow, okay, for automatic deduction from the bank account to the account payable, okay, for a certain period, okay, for a certain amount of money. Okay, and then bank service charges. Okay, of course, when the bank charge us money, okay, we do not realize about this, okay, because it happened at the bank decide the amount to be charged, okay, because there are so many different charges, okay, for example, for every check that you withdraw, also the bank will charge you, okay, so sometimes we may not aware of how much check that we withdraw for the month, okay, and then we may not aware also of the total, okay, of service charges. Okay, so we wait for the bank statement to see if we have any of these item. All right, and then we update our cash book. Okay, and then similar to direct payment deduction, okay, direct payment deduction, sometimes we do have a credit transfer, meaning that, okay, receipts of money from account receivable of the business or other receipts, okay, directly to the business bank account. Okay, similarly, when you make automatic deduction, at the same time, there might be other deduction, okay, from other businesses to your account. Okay, all right, so that is what we call bank gyro credit or credit transfer. Okay, so this one also we wait for the bank statement, okay, to look for this item. Okay, and then interest on current account. Okay, so this is also we also know about the interest when we receive the bank statement, okay, because we don't know the amount to be paid by the bank. All right, okay. And the last one is dishonor check. Okay, check received. So you have recorded check received at the business premise. Okay, you record in your cash book, okay, the check received, okay, from your customer for the payment. All right, so you record in the cash book, you present to the bank. Okay, you go to the bank. Okay, nowadays we do not go directly to the counter, but we deposit into check deposit machine. Okay, all the checks. All right, so you present to the bank. Okay, but when the bank process within that 3 days, okay, processing time, when the bank process, okay, the other bank refused to pay the amount to the business. Okay, so this is what we call dishonor check, right, or check tendang. So why they dishonor this check? Maybe because the customer account does not have enough money, okay, to be deducted for this check. So that's why, okay, this check was being dishonored. Okay, all right, that's it. Okay, so these are a common, okay, transaction recorded at the bank, but not yet recorded in the cash book. Okay, because we did not know when this transaction will happen at the bank. So only when we receive the bank statement, then we know, okay, what are other transactions that happen to our bank account at the bank. All right, okay, and then next is, okay, so what happened when you receive, this is why when you receive the bank statement and when you compare with your cash book or when you compare with your bank account, okay, there is a difference between the closing balances. Okay, there is a difference. All right, so the next step is to reconcile the bank account with the bank statement. Okay, so this is why we need to reconcile, because there is a difference. So we need to understand the reason behind of the difference. Okay, why there is a difference between these closing balances. Okay, even though you have recorded everything, okay, you duly follow everything, okay, you record everything, you make sure that you did not omit any transaction, but still when you receive the bank statement, you have some difference. Okay, you have in the amount, you might have the difference because of bank charges, because of interest received from the bank. Okay, all right, and maybe because of dishonor check. All right, okay, so we wait for the bank statement. Once we receive the bank statement, okay, then we're going to update the cash book, okay, or our bank account. Okay, so how to do this? Okay, this is very simple. Okay, so how to do this? Okay, very simple. You match the entry in the bank statement with the entries in the cash book or bank account. You match the entry. You check. Okay, item number 1 in the cash book, is it appear in the bank statement? Yes. Okay, item number 2, is it appear in the bank statement? Okay, so how do you match? Okay, you match debit column, okay, in your cash book or in your bank account. You match with the credit column, okay, in the bank statement. Okay, why? For credit column of credit side of cash book or bank account, you compare with the debit column of bank statement. Okay, so you are going to do this one by one. All right, so you're going to match the entries in the bank statement with the entries in the cash book or bank account. All right, after you match, okay, if you notice that there are items, okay, which appear in the cash book but do not appear in the bank statement, okay, so you notice there are items appear recorded by the business but not yet recorded in the bank statement. So you're going to mark that item, okay, as, all right, I think the second one, I'm talking about the second one. Okay, entries recorded in the cash book or bank account but not in the bank statement. All right, so we are going to mark the item as uncredited check, okay, or unpresented check. Okay, uncredited check, okay, those items that appear on the debit side of your cash book or bank account. Okay, so those are uncredited check. And items that is not, items that you have in your cash book but not in the bank statement, okay, on the credit side, okay, so you are going to mark as unpresented check. Okay, all right. What about entries recorded in the bank statement but not in the cash book? Okay, so what you are going to do is you are going to update your cash book, okay, of this transaction. You are going to update your cash book. Okay, when you refer to the bank statement, you notice that there are items, okay, which are not recorded in the cash book. Okay, so what you are going to do is you are going to update your cash book with this item. You are going to include, you are going to record in your cash book. Okay, however, except for error. Okay, except for error. Okay, if it is an error, take note of that item. Okay, item could have been recorded. Okay, you could have the item is already recorded. Okay, the item is already recorded, but okay, there is an error maybe to the figures, okay, or to the site that you post the transaction, okay, or something like that. All right, okay, so number 3, okay, number 3 is to correct any error made by the business in the cash book or bank account. Correct any error made by the business in the cash book or bank account. Okay, so these are the things that you have to do with your cash book or bank account. Okay, you hold your cash book, okay, and then you match the entry, okay, the entries in the bank statement, okay, and then you're going to find out, okay, this transaction which are not recorded yet in the cash book, or recorded in the cash book but not yet recorded in the bank statement. Okay, so for entries recorded in the bank statement, okay, let me repeat again. For entries recorded in the bank statement but not in the cash book, okay, entries recorded in the bank statement, when you refer to the bank statement, there are items that you notice, okay, are not recorded in the cash book. Okay, so what you are going to do, you are going to record them in the cash book. You are going to update your cash book. Okay, entries recorded in the cash book, okay, you notice that there are items appear in the cash book, but when you check your bank statement, they are not there. All right, so what you're going to do, okay, for the item, you are going to mark as uncredited check or unpresented check. Okay, next step, to identify if there is any error made by the business. If there is any error made by the business, then we're going to update also the cash book. Okay, all right, and then after you have done all this, okay, you're going to recalculate or update the closing balance, okay, of your cash book or of your bank account. Okay, next step. Step number 2. Step number 1 is to update your cash book. Step number 2 is to prepare the bank reconciliation statement. Okay, so step number 2 is to prepare the bank reconciliation statement. Okay, so using the bank reconciliation format, okay, we are going to begin, okay, the statement with the updated cash book or bank account balance. Okay, the one that you have recalculate just now. Okay, the one that you have recalculate here. Okay, recalculate or update the closing balance. You're going to transfer the balance. Okay, you're going to show the balance in the bank reconciliation statement. Okay, on top of the bank reconciliation statement, the first item, okay, the first line in the bank reconciliation statement is the updated cash book or bank account balance. All right, and then next you are going to add with unpresented check. Okay, next is to add unpresented check as per identify from cash book or bank account. Okay, you're going to add unpresented check. Okay, so why we need to add with unpresented check? Okay, you have issued a check to your payable. Okay, you have issued a check to your payable. Okay, but the check is not yet presented to the bank by your payable. Okay, so when you receive the bank statement, okay, so it is not in the bank statement yet, right? But you have issued a check. You have deducted from your bank account or cash book. Okay, so to match, okay, with the bank balance, okay, because it is not there in the bank statement, so we're going to add it again. Okay, but we are not going to to update or to adjust the cash book because the transaction already happened. Okay, so in the bank reconciliation statement, we are going to show it as unpresented check. Okay, we're going to show that, okay, this item already happened. Okay, we have recorded in our cash book, but it is not appear in the bank statement because we are in the process of reconciling the statement, the balances. Okay, so the whatever item that we have deducted, okay, when we calculate the closing balance for the bank account, okay, we are going to add. Okay, we are going to add in the bank reconciliation statement. Okay, all right. Similarly, for uncredited check, okay, we are going to less uncredited check. So uncredited check is the check that you receive from your customer. You record that transaction in your cash book or bank account, okay, as per identify from cash book or bank account. But your customer, okay, sorry, but your when you present the check to the bank, okay, maybe there is a delay in the processing time. So when there is a delay in the processing time, okay, so the check will process in the following month, for example. So that's why it does not appear in your bank statement. So the check is not yet added. Okay, the amount of check is not yet added to the balance in the bank. Okay, so that's why we need to less. Okay, we less. All right. Okay, and then to add or less any error made by the bank. Okay, at the same time, the business should inform of the error made by the bank to the bank. Okay, all right. And the last one is to calculate the balance. Okay, to calculate the balance of the bank reconciliation statement. Okay, so the balance should equal to the balance shown in the bank statement. All right, so the balance at the end of the day should equal to the balance of the bank statement. All right, so if it is not equal to the balance shown in the bank statement, then there must be something wrong with your bank reconciliation statement, or maybe there's something wrong when you update your cash book. So you have to go back, you have to check everything again. All right, okay. Okay, so this is bank reconciliation statement format. So the first thing that you have to do is, of course, the title. Okay, and then you prepare different columns, okay, for the computation part. All right, and then you're going to start the bank reconciliation statement with balance as per updated cash book, and then you're going to add with unpresented check which you already issued, deducted in your cash book but not appear in the bank statement. Okay, less uncredited check, you have record the receipt of check but it is not appear yet in the bank statement, so you have to less, because our aim is to make sure that, okay, we get the balance as per bank statement. Okay, so meaning that if we get the balance as per bank statement, it means that we have incorporate incorporate all the items that items that appear in the bank, meaning that we have recorded in the cash book, items that is in the cash book but not in the bank. So we mentioned about them here, where we add the unpresented check, we less the uncredited check. Okay, and if we have any error depending on the types of error, so we add or less the error. Okay, and then at the end of the day, you should get balance as per bank statement. If you get balance as per bank statement, so meaning your bank reconciliation statement is, the preparation of the bank reconciliation statement is correct. Okay, all right.